Welcome to this episode of Unstoppable Journeys. My name is Ryan Gubick, founder and personal CFO of MRG Wealth, and I'd like to introduce you to a special guest we have today, John Boone, Vice President of Marsh Canada. Welcome, John.
Thank you, Ryan. It's very nice to be here.
So we were having dinner a couple months ago talking about the exciting world of E&O insurance, which stands for Errors and Omission Insurance. But over the last number of years, we've had many clients that didn't know what E&O was and how it helps them, or what if they even need it. And it turns out you specialize in errors and omission insurance. Is that correct?
Yes, that's correct. Yeah.
So can you dive in a little bit more about, what is the problem that errors and omission insurance tries to solve?
Absolutely. So the quickest and easiest way I can describe it is errors and omissions insurance is intended to protect your business if you're a professional giving advice and that advice has the potential to cause someone financial harm if it's incorrect, or if you're negligent in providing all of the key facts related to the issue. So at first glance, you're going to hear errors and omissions, and probably what's going to come to mind is something like a law firm or an engineering design practice. Someone where they're trading their professional services, and there's obvious ramifications for if they fail to execute their duty. But I think what a lot of people don't realize, especially when they're starting a new business, is that anybody who's offering a service where they're relied upon to be the expert could face a potential errors and omissions claim. All it would take is for someone to turn around and say, you gave me advice, and because of that advice, I have suffered financial harm, or I feel I have suffered financial harm. And at that point, they are well within their right to file a lawsuit against you.
That's a little scary right there, right?
Yeah, no, that's
when you
right.
think of all the different jobs you can have where you're giving advice, right? So would that include accountants, HR professionals,
Yes.
Really any professional providing advice?
Yes, absolutely. Anybody who's providing advice. It can even go so far as things like fitness instructors. Now, with that said, there's obviously a understanding about the duty of care owed depending on the level of education and training that you have. The duty of care owed by a lawyer is going to, by necessity, be higher than the duty of care owed by an esthetician or a fitness instructor. Now, the key really is that when in doubt, you want to ask a professional like an insurance broker, what options are available to me to protect against professional liability exposure, against errors and omissions risk. I think that many people who are starting a new business have an expectation that someone along the way is going to fill them in. At some point, a contract will be slid across their desk saying, make sure you have this box.
Yeah.
And that's not necessarily the case. An engineer will have a contract that says you must present proof of professional liability prior to beginning your engagement with us. For an HR consultant or a bookkeeper, not necessarily.
And can you clarify when you say, starting a business, are these like major billion-dollar large businesses, or can they be small, single-owner, individuals that just want to start up consulting?
I get questions every single day from individuals who are just starting a consulting practice. A lot of times I'll have clients come to me who have left a larger firm or organization and are trying to go independent. And in a way, I see those individuals as being the most in need of my services because they're stepping into a potentially financially scary world for the first time. And they don't necessarily know the liability exposures that they face, and they haven't had to deal with it before because in their past career experience, the company has provided that solution for them. The errors and omissions policy was purchased at the company level, and they were immediately included under that protection as an employee of that insured entity. Now they're on their own, and suddenly there is no risk manager or chief financial officer or someone looking out for them. They're wearing that hat as well. So I think in terms of the importance of what I do and the importance of the advice I provide, I carry errors and omissions as well, by the way.
Yes, so do I.
But in terms of the importance of the information that I provide, that I think is actually where, in some ways, I add the most value, is letting people know who are going independent. Congratulations, you're going independent. That's fantastic. And I wish you all the success in the world. But make sure that you've had that conversation and that you're adequately protected.
And that's where I see quite often a big gap is individuals that are leaving the employment world to start off, their own small business, or you could just be single person business as a consultant and not even aware that this liability, number one, exists that could destroy their business before it starts and their family financial situation, and that there's a solution out there to help mitigate some of these risks.
That's right. It's a risk you don't have to bear all on your own. And I think there's another misconception that we can potentially dispel, and that's when it comes to what I'm going to be obligated to pay. When we talk about errors and omissions, a lot of times the protection that we're actually trying to get into place is protection for the cost of legal defense. When people hear errors and omissions insurance or professional liability, I imagine that their mind might take them to something they've read in the paper, a major lawsuit settles for however many millions of dollars, the kinds of things that make business news, right? But what they don't necessarily hear about is I was sued for something that was not my fault, and ultimately down the road, I will be exonerated from my liability to that third party that's coming after me. But in the meantime, I've had to incur heavy legal defense costs.
That's a really good point.
And it does no good under the Canadian legal system. After you have successfully defended yourself in a suit, you are within your right to go after the person for the damage you've suffered. But if the court battle's been going on for 2 years and your legal defenses have gone into the six figures, for a small business starting out, you're long since bankrupt and ruined before you ever have the opportunity to turn around and try and recoup some of those costs. So that there's kind of two sides to the equation. It's if you genuinely, legitimately have made a grievous error, if you've been negligent in your professional advice or the expertise that you offer, and then there's just I've done nothing wrong, but I'm still being sued because the third party is well within the rights to do that.
That's a really good point, John. Now, can you share a bit about your story? What made you want to go down this path of being an errors and omissions expert?
Yeah, absolutely. So I graduated from the University of Calgary when I was 24 years old with a degree in ancient and medieval history. Lots of transferable skill there. And I came fresh-faced out of school, and I was looking for an opportunity, and a close friend of my father's ran a state farm agency in Ontario. And his enthusiasm for what he did was contagious. This was a man who genuinely enjoyed having the opportunity to provide people with good advice, to provide people with good service, and in his own small way to help them on their success journey. And like I now do, he focused exclusively on commercial risk. He had a staff that handled personal, home, and auto, and his passion was, how do I help small businesses? So I went to State Farm on his advice, and originally I came to them with a proposal to start my own agency. And, bear in mind that I had never even worked in an office at this point.
You're just fresh out of university, right?
Fresh out of university. I had
Medieval
worked
sciences.
construction. I had worked as a bartender and as a waiter. I'd done all kinds of odd jobs to help pay for school. I had an education in humanities, and here I was, standing in front of State Farm saying, I want to run my own show. And so they said, well, we appreciate your gusto, but tell you what, why don't you try working for us first before you become your own boss? And that ended up being terrific advice because I got to experience firsthand what the day-to-day of working in an insurance agency was like. And the more time I spent in the insurance industry, the more I started to fall in love with it, because I really do see the value in being able to give people proper advice. There's a lot to be said now that I've moved on into larger and more complex risk, and now that I've moved into the brokerage world as opposed to a direct writer, and I have access to multiple insurance companies selling their products, and I'm able to present a solution where I can show the differences between the options that are available in the market to a company. And particularly in the errors and omissions world, two policies are not identical. It's not as commoditized as people think it is. There's plenty of areas for variance and differentiation between one insurance company's solution and another's. And I get a lot of satisfaction of saying, okay, company A gives you price X, company B gives you price Y. Here's the difference, and here's why they feel they need to charge you more for it, and does that add value for you?
And what's some of the bigger differences you see out there when you're comparing different policies for clients? Is there, one or two top main differences that people should be aware of when they're looking at policies?
Yes, absolutely. So on the professional liability sides of things, the professional liability side of things, there's going to be a few items to watch out for. The first of which is you want to make sure that your professional liability you want to make sure your professional liability policy, when possible, has first dollar defense, meaning that the deductible that you see on the policy does not apply to the cost of defense. In other words, the policy will start defending you right away. So if you're a professional who's got, say, a $2 million limit and a $50,000 deductible, you don't want to have to pay the first $50,000 of your legal defense before the policy will start responding. So first dollar defense can be a critical component. Defense costs outside the limit of insurance would be a second one to watch out for. That means that your policy basically has two different bags of cash, one for the defense costs and then a separate line item for any settlement that's awarded against you. You want your policy to pay those defense costs outside the limit of insurance. A third one that is always worth taking a look at, and you can ask your broker to provide a specimen policy, a copy of the policy wording so that you can review it for yourself, is what is the definition of an insured person under that policy? Does the insured person definition include, as an example, independent contractors? When your business gets to the stage where it's not just you being the owner and operator anymore and you are actually taking on staff, a lot of people will make that rocky transition by using contract staff as opposed to actual salaried employees. It's a natural thing to do, but the contract staff, you want to make sure that their work is covered under your policy as well. And if it's not covered under the policy, then they're going to need to present their own insurance. So those are a few things off the top of my head that I can think of that it's worth taking a look at, diving into the wording, and getting your broker to show you the difference between the two policies that they've presented as quote options for you.
Those are excellent points. And as they say, the devil's in the details.
Yes.
The definitions when it comes to insurance products can make or break a policy, whether it's going to be useful to the owner.
Absolutely, absolutely. And you are well within your right as a purchaser, as a potential insured, to ask your broker, I see option A is a fraction of the cost of option B. Tell me why. Or this broker has given me a comparative quote, and again, the price difference is seemingly enormous. There has to be a reason for it. Stay curious, stay interested, right? Don't just assume that the other broker is better at their job and getting cheaper. It's worth diving into it. If it doesn't feel right, if we've got one option that is an order of magnitude more expensive than a second, there's probably a reason for it. And it's worth diving into that and finding out why.
Great advice. And I agree. I always say there's no free lunch in life.
No.
Right? So if something seems too good to be true or there's a major cost discrepancy, quite often there is a reason for that.
Yes.
You never want to leave unanswered questions in your mind, right? Because
Yes, exactly.
can lead to costly mistakes. So if you're thinking it or you don't understand something, I think that's another really big thing, is just ask.
Yeah.
Right? Because even in my world, there's numerous times where you're diving into something and you're like, I don't know, we have to get either the tax lawyer or the accountant or, it's a unique, complicated area. Don't guess, let's ask, let's get the client information. I imagine in the insurance world, do you deal with some complicated cases sometimes too, where you might not have the answer and have to get it yourself?
Absolutely. Absolutely. And it's always a funny feeling because there will inevitably be moments where the specific circumstances surrounding the client's business are such that I've never seen something quite like it before. And at times I've had clients who you can tell are uncomfortable to ask a question. Maybe they don't want to look foolish or they're embarrassed. And they end up asking a question where I go, you know what? I hadn't thought about that either. That's worth knowing. Let's go back to the insurance company and find out a clear answer for you. So yes, take the risk and put yourself out there and ask that question. If you're not totally sure of what you're hearing, if you're not sure you understand what's going on, ask the question. Brokers, I like to think, should be very open and receptive to having questions asked. And I personally pride myself on not assuming that I know everything either, and going back to the insurer when necessary to make sure I've got the answer, the right answer for the client.
And I think that's an important thing. I just want to reiterate that because quite so often I see and hear people that are nervous or scared or shy to ask a question.
Yeah.
And even coming from two professionals, we have to ask questions in our day jobs, right? We're specialized in this specific area. No one knows everything about everything.
Yeah,
Right?
absolutely.
So just to remove that myth, remove that barrier, if you're watching this and you're thinking, if you have questions in the back of your head that you wish you would have asked or you want to ask them, right? Because you're not likely alone. There's many people that likely have that same question, and the person that asks it is better set up than that one that doesn't.
That's right. I mean, at the end of the day, it's just how the human memory works. If you're not presented with the problem every single day, then even if you've solved that problem before or sought that answer before, it'll fade in your mind. And it's okay to say, you know what, it's been a little too long since I've last dealt with that particular situation. I need to go back and get a refresher.
Absolutely. Can you share with us one of your success stories of, implementing the solutions that you do to help your clients, and what did that look like?
Absolutely. So one of the solutions that comes to mind for me was actually relatively straightforward, but I had an engineering practice come to me that was experiencing a tremendous amount of frustration. They were accepting a contract from a very large oil and gas related firm, and they were a relatively small operation. I think they only had 7 or 8 engineers on staff, and they were being asked to carry an absolutely enormous professional liability limit relative to their contribution to the project that they were going to be participating on. And at the end of the day, the contract was only representing probably less than $50,000 in fees to their engineering practice. And with the professional liability limit that they were being asked to carry, it was basically completely wiping out their margin and making it that, bring it to the point where they were having a serious conversation about, we are going to take a loss on this job, but we want to maintain a relationship with this company. And so they came to me because the other broker that they had been dealing with had left it at, here's the quote to increase your limit, take it or leave it. And so the solution that I came up with is a relatively simple one. It's, why don't we just insure an additional limit for that specific project, as opposed to getting a blanket limit for the entirety of your practice where they're rating against every dollar of top line revenue that you're bringing in. Why don't we rate based off of the fees that you expect to collect from this project specifically? And I was aided in this by the fact that their contract stipulated that they were only exposed from a liability perspective to their fees payable. Basically, their limit of liability was hard set. We will not be exposed to more liability than what we've been paid. So in that case, it was a pretty easy case to bring to an underwriter. Now, I didn't bring it to their current insurer. What I did is I brought it to a second insurer. And I said, listen, they've already got a primary $2 million limit in place. We need to get them up to 10. It is for one specific project that has a clear end date and their liability is limited to fees payable. Can we just insure the one project? And we were able to provide a solution for them that was significantly less expensive than what their original broker had quoted. So it's nice to win a new account, but what was nicer is that we changed the circumstances of this contract that they had signed from, we're taking a loss, but at least we have a good relationship with a large company, to, we're actually making a profit on this again because we've reduced our premium by enough that we can now claim some margin on this job and actually walk away with money in our pockets.
That's a great success story. And it all depends on how you look at it. As you're describing this, once you're in the weeds, it's really difficult to quite often figure out these solutions, but it seems very logical.
Yeah, that's it.
Great job.
And sometimes it just needs that fresh set of eyes. It just needs a second person to look at it and go, well, wait a second here. Just because they say they need however many X dollars of professional liability coverage in place contractually, that doesn't mean that we have to go back to the existing insurer and say max out your limit. There might be a workaround here.
Well, and that's the specialization side of that industry. Having your skills and knowledge, knowing that was even an option to go down that path, right? I think so many times you don't know what you don't know. And if the standard is just increase the limit, that was quote number one. Yeah. With some expertise and some thinking outside the box and figuring out, okay, how can we make this, win-win for everybody, the client, making sure the liability is covered as well as profitability to stay in business. Exactly. That makes a lot of sense. No,
exactly right. And like I said, it gives me a lot of satisfaction when we can find solutions like that. Another example that springs to mind is circumstances where you've come across, and for whatever reason, I'm going to call it just general broker apathy, where you have a client who's come to you and has said, I've been with the same insurance company for 8+ years. I've never seen a comparative quote. The reason why the other broker has not quoted with other people at renewal, it's hard to say. There could be 100 reasons for it. They might genuinely believe they're with the right insurer, but insurer appetites change over time. An insurer
And what does that mean? What is insurer
Yes,
appetite?
sorry, you're right. I should back up. So an insurer appetite is basically what type of risk exposures they want to have in their portfolio. So every insurer has a limited amount of capacity when it comes to the risks that they can take into their book. So you might have an insurance company look at any given industry and go, okay, bookkeepers. We're okay being exposed to a maximum of X dollars for bookkeepers this year. They seem like profitable business. It seems like the loss ratios are going to be right for us. We're not going to have too much outflowing. Let's take it on. They take on a whole bunch of bookkeepers, maybe in one particular region of the country. A few years goes by, and they might find that their loss ratio was not as pretty as they thought it was going to be when it started. They're taking more claims than they thought they were going to take. And it reaches a threshold where they start to say, maybe our finite amount of capacity is a better position somewhere else. So maybe we want to pull back from the bookkeeping space. Again, just using bookkeepers as an example. Maybe we want to pull back from that space, and maybe there's somewhere else where we would be there would be a better use of our premium dollar, or excuse me, our market capacity. So at that point, what might start to happen is they might start to increase the rate that they charge at renewal because they're actually trying to shrink their position in that industry. They actually don't want as many risks. It might not be a case where, in an extreme case, they'll actually cancel the renewal. They'll say, we are no longer offering insurance to you. But that's only done in situations where they feel an urgent need to be less exposed to a particular risk category. A lot of times what they'll do is they'll just gradually cool off towards an industry. Every year you'll see the renewal premium going up, and they just become less and less enthusiastic about placing new accounts for that particular industry sector. So at that point, what the savvy broker should do is he should be having his eye on the market. He should be doing test quotes with other insurance companies, and he should be maintaining a general awareness of which insurance companies are cooling down and which insurance companies are heating up, which are saying, you know what, we love that risk. We don't have enough of it, and we think that we're going to be profitable if we insure that risk. So let's find more clients in that space.
And it's different by industry, right? You're referring to each client based on their industry.
Exactly. So you'll have, and so that's what we refer to as the risk appetite. So you'll have insurance company A saying, you know what, we like engineers. We want more engineers. Let's take more engineers on. Let's offer them a better price. And then gradually over time, oh, we're taking more losses on engineers. Okay, well, maybe we should, get a little bit out of that space and a little more into another space. And so they'll start to cool down. But wherever they're cooling down, they've probably got a competitor who's heating up and going, yeah, we'll take them.
Is there a lot of insurance companies in this errors and omission space where you can get different quotes and different packages and different value?
Absolutely. Yeah. So it depending on the industry that you're hoping to insure, there can be as many as 30 different insurance companies that are offering a solution.
Wow.
Typically speaking, the more specialized you are as a professional, the fewer insurer options are available. As a general rule, the higher risk you are comparatively as compared to others in your peer group. So engineers, again, using them just as an example, there are certain types of engineering that would be considered higher risk than others. And so typically speaking, if you're seeing a higher risk subsegment of that industry, you're going to see fewer participating insurers, and those that are staying as a viable market solution are going to charge proportionately higher, knowing that they have less competition.
That makes sense.
Yeah.
And what about those that don't want extra insurance, right? We got car insurance and house insurance and maybe life insurance and all these different insurances, and they're weighing, hey, do I really need to pay this premium to have another insurance policy? Do you have any stories or situations you or your colleagues have seen over the years where someone decided, no, I'm not going to go down the insurance path and just kind of gamble?
So yes and no. I think that most business owners that I talk to, particularly founders, tend to be very, very dollar savvy. And They don't want to gamble. They don't want to take on more risk than the risk they've already had to take to start their business. But they absolutely want to make sure that they're deploying their risk management dollars effectively. And what I tend to see is not so much a cavalier mentality of I'm just going to see what happens, but more of a, should I use these dollars for insurance premiums or front-end risk management? And that is an absolutely fair conversation to have.
And what does that mean?
So as an example, if you have a client who's considering purchasing a cyber crime policy versus spending a little more on IT security, I look at it as two sides of the same coin, and I would make the comment if asked that the same way you want your car to have both seatbelts and airbags, you want to have both a cybercrime policy and a good IT security provider and a good IT security infrastructure backing it up. But if forced to make that difficult choice, if saying this is the maximum number of dollars I can spend in a year, it comes down to the comfort level of the individual. And sometimes their own personal preferences will dictate where they end up deploying those dollars and how they use their capital.
And can they scale different sizes of policies? If someone's starting out and maybe budgets are tight and they're like, oh, I don't want to take the liability. This all makes sense. This sounds good, but I might not have the budget to get all the insurance I want. Is there different scalable policies that people can start with and then grow?
Yes, absolutely. And that's a great point, that if somebody wants to have an insurance solution in place, you can start with a low limit and grow into it as your business grows as well. I would actually subscribe to that philosophy if I was starting my own business, that some is better than none. Particularly on the cyber side, where premiums have been rising steadily over the years as more and more cyber claims are filed. By all means, take out a small policy with a small limit, something that you can fit into your budget. And hopefully what you'll do is present that as a strategy to your broker. And if your broker's receptive, he'll then turn around and say, okay, well, here's what this looks like. Here are 3 quotes. This one's for a $250,000 limit. This one's for a $1 million limit. This one's for a $2 million limit. Which fits your budget right now? And not only can you adjust the scale of the policy, a lot of times you can also adjust what coverages are included as line items underneath the primary limit. So cyber insurance, again, I'll just use as an example. You can start with a basic data breach liability policy, which is basically just covering off if you end up leaking someone's sensitive information as a result of being hacked or just as a result of your own error. You can have a little bit of data breach security. Over time, that same policy could be expanded to include business email compromise, social engineering, and other coverages that actually protect you directly, that aren't just a third-party liability exposure. So you can say to yourself each year at renewal, okay, I'm still comfortable with the limit, but maybe I need to expand it. Maybe I need the policy to be wider, not just taller, and expand the coverages accordingly.
That's excellent. That it can scale and ebb and flow with individuals and their budget and their business size, because life's all about change.
Yes.
Right?
Yeah.
Like what does that say? The only constant in life is change.
That's right. That's right.
So for people that are watching that are resonating with this challenge or this problem, what are some of the things that they should be thinking about or that they could be doing?
I would say that the first thing that you should do, if you're starting to ask yourself whether or not your risks inherent to your business are adequately protected, is to try a brainstorming exercise. Write it down on a piece of paper. Say to yourself, what could go wrong? And the goal is not to give yourself nightmares to keep yourself awake at night, but just to make yourself mindful of the risks that you might be facing without realizing it. There's the immediate and obvious risks, such as general liability, where, if I am out taking a client meeting and I accidentally knock the poor person over and they hurt themselves, is my business going to be sued for that? And then there's the more nuanced ones where, what do people come to me for? Are they coming to me for a product? Am I selling, a third-party solution? Or are they coming to me because I'm hanging my shingle above my door as the expert for whatever my chosen field is? And at the point where you say to yourself, well, they rely on my judgment and my counsel. They expect me to be the expert and to provide advice that they can bank on. Okay, well then maybe I have an exposure to errors and omissions and I should talk to a broker about it. Along the same lines, for a cyber exposure, if you're going through your brainstorming exercise and writing risks down on a piece of paper, write down as a possibility, if someone was to penetrate my systems, could they steal information that wasn't mine to give? And would somebody suffer financially because of it? Am I storing credit card information? Am I storing personal addresses? There's an obligation in Canada, as an example, to notify people if their data has been compromised. And hiring somebody to help you through that process and spending the money to send out the letters to notify people, depending on how many records you keep on your system, that could be a huge cost in and of itself. Never mind the long-term fallout from that cyber event. So yeah, I'd say step one, brainstorm. Write risk at the top of the piece of paper and then see how many risks you can come up with. And if you write a few things down and say to yourself, I don't know how realistic that scenario is, ask a broker. And I think they'll be able to provide you with some guidance.
That's a really good point. And I like how you said write it down. Don't just think about it. Because quite often when we think about something, the thought goes in one year and
right.
sometimes out the other year. But by writing it down and giving it some time to sleep on it and think about, you can see how big this list can go. And then talking to friends, family, brokers, and figuring, okay, where are other gaps that you might not even thought of? And quite often that risk list can get quite substantial.
Yes, absolutely. And I love what you said there about talking to friends and family as well. Sometimes saying something out loud can be very powerful to cementing the idea in your mind. I think I could be sued if I gave someone bad advice. I think someone could suffer financial harm if I led them down the wrong path. It's one thing to think it, and it's another to actually say it. And even if you're just saying it to your partner or to a friend, and even if they turn around and go, nah, that could never happen, you'll say it out loud and you'll feel in your gut that shift, right? Where suddenly you're going, no, you know what? I think actually I could cause somebody a serious problem in their personal life or their professional life if I gave them the wrong advice. So,
and probability versus possibility are always two really important things, right? Like, is it probable to happen or is it possible to happen? Because if the answer is yes, it is possible, and you go down the due diligence and talk to your broker and talk to some other people, like, yeah, there's situations in your industry, in your business where this has happened. And what would the financial ramification of a $500,000, million, 5 million, 10 million, whatever the dollar value is, what would that impact your business, your family, your livelihood?
That's right.
All of your dreams you had in life. And when you start looking at that big picture, that's where I think the insurance aspect and the solution that you talked about becomes so valuable.
Exactly. I think that's where, if nothing else, you owe it to yourself to ask an insurance broker the question, right? If you're sitting there and you're plausibly imagining a scenario where you could cause someone financial harm and then they would feel the need to engage a lawyer and pursue legal action against you. What does that scenario look like if you're spending months defending yourself in court? If you're saying to yourself that it would be harmful or potentially destructive and would derail your plans for your business, then at least find out what it would cost to transfer that risk.
That's what I think this conversation is really about, is it's understanding, are you at risk, number one? Because I think a lot of people don't even realize they are at risk.
Yes.
And then if the answer is to yes, what are your options, right? Can you transfer it? Can you accept it? Can you mitigate it? Like all those different aspects, but making an informed decision and being able to sleep well at night and say, okay, I know where my risk exposure is. This is the plan I have in place and I'm comfortable with it.
Yes, exactly.
Wonderful. Well, thank you so much for sharing your solution stories with us today, John. Is
My
there
pleasure.
anything else you want to share with the audience before we wrap this episode up?
Yes, absolutely. So the last thing that I would share is just my heartfelt good luck to anybody who is starting a business, building a business. I wish you all the success in the world. And if and when the subject of managing the risk of your growing business comes up, please don't hesitate to reach out to myself personally. You could find me on LinkedIn. I'm happy to answer any questions. If not me, though, include a broker in your life. The same way that a business owner will find a trusted accountant and a trusted legal counsel, find a trusted broker and have somebody that you can bounce your questions off of.
It's really good advice. Thank you so much, John.
Thank you, Ron.
Well, this wraps up another episode of Unstoppable Journeys, discussing solutions to your problems to help make your journey unstoppable. Thank you for joining and have a great day.